Hello there and welcome to Money Control. My name is Ashwin Mohan and you're watching a fresh edition of our ongoing special pre-budget coverage. Over the course of the past few weeks, Money Control has spoken to a whole host of top corporates, top economists, as well as top market voices. Joining us on the show today is a top deal maker. Joining us today is Ajay Saraf, the head of investment banking and institutional equities at ICICI Securities. He's a veteran with the group. Ajay, thank you so much for taking out time and joining us on the show today.
Good afternoon, everyone, and thank you, Ashwin, to have me on the show today.
Right, Ajay, let's dive straight in and try to decipher and declutter the current environment in which the finance minister is going to present the budget. Now, this is, of course, the last final full year budget under the Modi regime before elections take center stage. But it comes at a very interesting time. You know, there's a cocktail of global recessionary fears, there's a high interest regime, there's also geopolitical uncertainties, and of course, there's also the fear of rising COVID cases, not only in China, but in a few other countries as well. Back home in India, there seems to be a bit of relief, at least on the economic front, because the RBI's financial stability report highlights that India has sound macroeconomic fundamentals. In fact, it also says that India has healthy financial and non-financial sector balance sheets. In fact, the IMF also said that India is currently in a bright spot in the global economy. So, Ajay, from your perspective as a keen market observer and a seasoned deal maker, what do you make of the environment and the factors that will weigh on the finance minister during budget 2023?
Well, you have very largely captured all the current variables given the environment today. But additionally, I would think I'm in a camp where we think that the world will not get into a recession. There would definitely be an impact on the economic growth and the pace of the economic growth. So there will be a slowdown, but it may not kind of hit the recession button. We would also think that the interest rate tightening cycle globally will kind of see the peak in by March, April, which means that going forward, the second half of the year will definitely be a much better year. And also, I would think that on the budget front, we expect development capex to continue to drive overall, government spend in CY23. Also, the policy initiative towards, further formalization of the economy, pick up in the investment cycle, and the policy focus on the boosting manufacturing. All of that will kind of continue. So, right. As I said, it's a pretty volatile year, which especially in the first half of the calendar year 2023, and from there on, I think that it should settle down to be a very decent year for the next 6 months.
Right, point taken, Ajay. Now, one important segment that has been in sell mode since the beginning of the year, since January, and they've dumped thousands of crores of shares. That's FPIs or foreign portfolio investors. Now they have been, in sell mode. What do you think the government can do to address their concerns and perhaps reverse this trend? What is on the wish list of the FPIs?
Well, you've mentioned earlier as well, is that India kind of stands out in the world map, right? In terms of its the growth profile, the demographic, the dividend, which is to be played out. So all of that means that the India as a market will remain on radar of most of the large foreign investors. And, what's kind of derailed it for the last 6, 9, 12 months was obviously the rate tightening cycle, inflations and stuff like that. It's not because of lack of any government policies for FPIs in India. So I would think some of these factors, as I stated earlier, start to recede in the later half of the year. You will see. So this would be a tale of two halves this year, where you will see a pretty strong second half and kind of muted first half. And I would think that some of the policies with the government, getting a parity on the dividend and the buyback, is something which might help boost FPI sentiment towards India. But I guess most of it would be dependent upon how our growth pans out for quarter and quarter for the next few quarters. And if that kind of scans out, I don't think anybody would dare to ignore India globally.
Point taken, Ajay. Now let's shift focus to the government's disinvestment program. Now, if you look at a recent report by Goldman Sachs, it says that except in FY18 and FY19, disinvestment receipts in the last 8 years have fallen short of budget estimates. In fact, the report also goes on to point out that in FY21 and FY22, the government achieved only 18% and 8% of its disinvestment targets respectively. Now, currently, of course, the major deal that is under the lens is the sale of IDBI Bank. There are a few expressions of interest or EOIs that have come for IDBI Bank. If you look at the budget, do you expect any major announcements or proposals from the disinvestment point of view?
Well, last few years, we have seen that the government action on disinvestment has moved to a strategic sales. And you would have seen that strategic sales takes a bit more time. It takes time to kind of, do that disinvestment, get a strategic buyer in place. And in the past, we have seen that it got bogged down in terms of policies, laws, and all of that needed to be sorted out. And what we have seen now, especially in the case of IDBI, is that the government, various departments kind of coordinating. And before they launch the process, they've kind of, settled a lot of these prospective legal policy hurdles, which might come in a way of a prospective buyers to come into such transaction. So to that extent, this one is something which is as a welcome development, because that will expedite a lot of these disinvestments on a strategic side. So we would think that, coupled with normal, OFSs, where on the listed entity, people, the governments kind of come once in a while to come and do it. But overall, I think directionally we would see a smaller number. That is what our gut feeling is on the budget for what the government would expect out of the disinvestment.
Right. Now we've covered the markets, we've covered FPIs, disinvestment. Now let's talk about, a buzzword. In fact, this is not a buzzword now. It definitely was a buzzword a year and a half earlier, and that is startups. We're all aware, Ajay, of how there was a huge startup boom. There was a birth of many unicorns. But in the last 6 to 8 months or so, there's been a funding winter of sorts, and that's really hurt the startup sector badly. The startup sector has seen job cuts. There have been down rounds. VCs aren't as enthusiastic as they were earlier when it comes to signing, larger checks. What do you think the government can do to boost the sentiment in the startup sector? Of course, this is also a segment that is very close to the Prime Minister's heart.
I would think, you said it correctly. Startup had a good run, last few years, partly because of the government encouragement policies, actions, and also because of easy money, it's kind of splashing around the globe. And you would have seen a lot of VCs, angel, Series A kind of a funding, which was pretty, you have seen quantum leap on such kind of funding. And I would think that going forward, you will see where, in the past you would have seen people only chasing growth. You would see companies calibrating the growth with profitability, and those kind of companies will continue to attract that kind of a strategy. Part to profitability kind of a strategy will continue to attract a lot of VC and private equity money. I don't think there's a dearth of that kind of money to back startups. And I would think the government on the policy side has been supportive, and they'll continue to be supportive. Tax might be one, but I would think easier, listing, environment for such startups is again something which would encourage a lot of, fundraise of these companies. So I would think that the good work the government is doing on the startup it's a big focus area, and I would think lot of rapid progress on that policy front there.
Sure, Ajay, point taken. Now let's shift focus to the entire segment of overseas direct listing. If you look at the last few budgets, there's always been this buzz that perhaps the government may lay out the blueprint or the rules of the game when it comes to overseas direct listings. We have not heard anything in the last two budgets at least. There are a lot of pockets of India Inc. and some even in the markets, that believe that there are certain kind of companies and certain assets that perhaps can be best valued overseas because they may not be understood as well in the Indian markets. And therefore, they feel that perhaps India Inc. needs that flexibility, needs that additional option of overseas direct listings. Do you think this is the right time for the government to address this and come out with a blueprint? Are you expecting this in the budget in any form?
Yeah, great question. But Ashwin, Indian markets over the last 3-4 years have demonstrated resilience and maturity. Towards new age companies, how to value such companies, the niche stories, and these are the stories which has come to the market. For the first time in India, has been received well. Obviously, such stories, and we have seen that they get attention in India. They might get lost in a larger market. So it's like a small fish in a large pond. Is that kind of a thing which will happen to the Indian companies looking to list overseas? I would think, and we haven't seen very too many great outcomes of Indian companies who have listed abroad to kind of give us to say that people will find that market a bit more lucrative. From the valuation perspective, we remains one of the, as I said, globally one of the more expensive market, which means our PE, our way of valuing. So I don't see too much kind of a value in seeing companies list abroad. But going back to your question, whether the companies should have options, certainly. I think over the next few years, I would think that these companies should have the option to list overseas.
Now, one can't talk about the budget and not also refer to tapping foreign investors. At the end of the day, that's clearly really important. India is trying to project itself as an investment-friendly destination. If you look at Budget 2021, now that liberalized the foreign direct investment in Indian insurance companies to 74% from the existing cap back then of 49%. Is there more scope, Ajay, for the FM this time to perhaps open up FDI in more sectors, liberalize the cap? Do you think that's something that's feasible this time around and could be on the FM's plans?
There's definitely more scope to further attract FDI by increasing the existing caps, more policy initiative towards ease of doing business and stuff like that. Government has been making consistent efforts to reduce regulatory barrier, and we expect the government to continue with this development reform. In the current context, I would think that theme of India being an emerging manufacturing hub, a very strong manufacturing hub with a growing domestic consumer base has gained prominence. And I would think policy action to happen around those themes. And we do expect the liberalization on the policy caps as well to keep on happening.
Right. Let's now talk about a subject that's really close to your heart, and that's equity capital market deals. Last year was relatively subdued when you compare it to the kind of M&A action. Let's look at some of the stats here, Ajay. Around 59,000 crores were raised via 38 IPOs in 2022. Out of this, of course, a lion's share was thanks to the LIC IPO, around 20,000 odd crores, right? So therefore, the numbers may look a little skewed thanks to the LIC IPO. Now, according to data from Prime Database, this is much, much lower than the action-packed 1.2 lakh crore rupees, and that was raised by 63 companies in 2021. So look at the disparity over there. Fundraising via QIPs and rights issues, that also dipped last year. What opportunities, Ajay, does Budget 2023 have from a regulatory and policy standpoint, to improve the equity capital market fundraising environment? Any thoughts on that front?
Yeah, just to give you a perspective, Ashwin, the calendar year 22 was indeed, a year where there was a slowdown in terms of volume, But just to give a perspective, it's the second best year after calendar year 21 in terms of number of companies coming for an IPO. So from that perspective, you would see that the interest of companies to come into the market for listing remains very strong. What has happened is the large value ticket size transactions may not have happened because FIs has been largely been absent in the market, and a lot of IPOs in FI 21, the large IPOs didn't make money for the retail investors. I'm saying that correction has taken place. So we do expect this momentum to continue in the in the current in the calendar year 23 as well. But in terms of what we expect from government, I think to continue with the policy of towards development and themes about development capex. That's what we think will happen, and themes about corporate and the government capex, real estate cycle, trade growth, and pocket of discretionary consumption to do well. So all of that means that calendar year 23 will be a incrementally stronger year than the previous year. It may not be anywhere close to what we have seen in calendar year 21. I would think we should take calendar year 21 as a kind of a bit of an outlier. But if you see the last 5-year data, the last year data was not bad at all.
There's one segment that's been extremely active on the deal front, and that's the segment of global funds, whether it's private equity funds, whether it's the pension funds, whether it's the sovereign wealth funds. They are very, very active in most of the deal scenarios. In fact, they've also struck quite a lot of majority or controlling stake buyout deals last year. And in a sense, they are the new strategics because they have edged out many strategic players in several of these M&A auctions. As far as these funds are concerned, keep in mind that the government had in fact set up a high-level panel, and that was headed by former SEBI chairman M. Damodaran. Now, this panel was going to look into all the issues that were faced by the venture capital class and the private equity class, and I believe that they've submitted a report, and that report speaks about certain tax proposals that can in fact be included to make the environment a little more friendlier. Now, Ajay, how do you expect the government to respond to this report, and how can they encourage more private equity shopping going ahead?
So, if you see, and you correctly said, the entire VC private equity space has kind of exploded over the last 3-4 years, and a lot of private equity, large global private equity guys, their style of investing has changed from a large minority now to a buyout situation where they want to own the majority of the company. They want to run that company, get professional management. I think that's the preference for large. Though you have also the mid-size private equity guys who are still willing to do a minority stake, and there are these VCs who do startups and stuff like that. So you have different models. And then what has happened, Ashwin, is over the years, we have seen that the entrepreneurs in 90s and 2000s were, in a way, debt-led, startups where, you get help from the banks to kind of get your loans or the working capital loans done easily. And then used to kind of, back of that, you need to grow, put up the manufacturing units. And that was a model which doesn't exist anymore. So it would be, in a way, equity-led. And when you say equity-led, startups, entrepreneur journey, you would have a very big part. The VCs and private equity guys have a very big part to play in that journey. And anything which make them, this investments more conducive, I'm sure everybody would be working on policy initiatives to kind of make it a bit more easier for these guys to invest. Though I think, most of it is already in place. Maybe there would be some incremental policy actions, which, as you said, the committee has working on it and would recommend, and the government would take a considerate view on that. But I would really think that this segment holds a future for an entrepreneur journey into creating large value for himself and for the shareholders.
No, one last question before I let you go, and I want you to, really stick your neck out over here. If there's one single most important proposal or measure that you're expecting from the FM in the budget that will spur deal activity, what would that be?
Well, I won't say one. It's very hard to say one. I hope something on the capital gains doesn't happen. There's no truth. Increase in the capital gains tax. I think would be a lot of a relief and a boost because there's a lot of people have been worried about, and there's been news reports about on that factor.
Constant worry every time before the budget.
Yes, and then that's I don't think government has been working, and it's not only budget. I would think throughout the year you see policy actions. So to me, budget itself is not it's just not one big day where all the policy actions takes place. This government has shown that they do it throughout the year, whenever is needed and whenever they are ready with their view. So to that extent, I would think is a policy, reforms, policies are an ongoing initiative and not a one big bang day work.
Ajay Saraf, always a pleasure chatting up with you. Thank you so much for taking out time and of course sharing your perspective on the expectations of Deal Street from Budget 2023.
Thank you, Ashwin, for having me here. It was a pleasure. Thank you very much.
With that, it's a wrap on this show. Thank you so much for tuning in. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views and updates.